This video was made possible by my patrons, Joshua Bartlett, James Schubach, and Hector Defendi. Thank you so much to all of you. Today's video was selected on the basis of a Twitter poll. Check out my Twitter profile every Sunday to vote for Tuesday's video on My 2 Cents. Hello everyone, this is My 2 Cents. Today we're going to be reviewing the Young Turks, and some comments that were made regarding cutting corporate tax rates. Well, the basic economics behind how tax cuts help the economy is fairly easy to understand. Addressing individual tax rates, such as corporate tax rates, can be more difficult. This is because, well, taxes as a whole are easy to understand once they're broken up into income taxes, corporate taxes, estate taxes, sales taxes, and other forms of taxes. The data related to raising and lowering various tax rates can become difficult to interpret. For example, a liberal may point to a particular academic study that states, when the corporate tax rate was raised in country X's economy grew by 10%. Now, that may be entirely true. However, without knowing what happened to other tax rates in that country, as well as what the many other factors that influenced the economy were that year, there would be no reason to think that economic growth was directly a result of raising the corporate tax rate. As Thomas Sowell states in The Vision of the Anointed, anyone who looks through enough statistics will eventually find numbers that seem to confirm a given vision. Often, the same set of statistics contain other numbers that seem to confirm diametrically opposite conclusions. The same is true of anecdotal facts. That is why evidence is different from mere data, whether numerical or verbal. For example, a 2014 paper published in the Journal of Politics noted that lowering corporate tax rates at the state level all throughout the United States had negligible effects on economic growth, sometimes even correlating with a slight decline in economic growth. This may lead one to believe that lowering corporate tax rates does not lead to economic growth. However, the authors of the paper themselves noted, economic theory fails most likely due to a violation of key assumptions. Business taxes likely are not a large enough percentage of total corporate revenues to influence business decisions. Businesses may also be able to pass on a majority of their tax incidence to their consumers or workers, again diminishing the role of taxation in business decisions. It is clear that businesses are not as sensitive to tax policies as state politicians seem to think. Corporate tax rates are also affected by what's known as capital cost recovery allowances. Capital cost recovery allowances have a particularly strong effect on the tax burden on business investment. By increasing or decreasing the time over which a capital investment can be deducted, the value of the deduction stream, net present value or NPV, also changes. If depreciation lives are lengthened, the NPV of the deductions decreases and a greater portion of the capital purchase is taxed, which increases the tax burden on the capital investment. This is a problem because when the deductions are strung out over time, businesses end up paying taxes on part of their costs as well as their profits. If depreciation lives are shortened, the cost of investment is more fully eliminated from the tax base. Best of all, if investment is immediately expensed in full, then the whole cost is recognized for tax purposes, which effectively eliminates the taxes on normal returns. To capture the effect of capital allowances, many academics have moved away from simple statutory rates to effective marginal tax rates, which adjust for differences in capital allowances. So, all this to say, it is impossible to make a blanket statement like, lowering corporate tax rates will lead to economic growth. It very well may, but it all depends on what else happens in conjunction with lowering those rates. Lowering the corporate tax rate and only the corporate tax rate simply does not guarantee that the economy will grow, especially if the corporate tax rate did not cause significant costs for a business in the first place. Personal income taxes are likely to have far more of an effect on economic growth. However, what is important to note is that lower taxes overall do lead to economic growth. This is self-evident. If people have more money to spend, there will be an increased demand for products and services, which leads to more jobs, which leads to economic growth. Of course, at this point, the liberal will come out and say, but it's the middle class and the poor that need to have money to spend. If the rich have their taxes cut, they're just going to save it. Oh, really? How do you think the rich got rich in the first place? They only got rich by taking risks and making investments for which there were returns. In order for new businesses to form and new products to be invented and produced, there are substantial startup and funding costs. This is why many private businesses go public and begin selling stock to shareholders in order to increase capital. Of course, there is always a risk in doing this. The business could fail, or the product may not sell, which means investors have to be wary of how they invest. Higher risk investments have the potential to produce the most profits, but they also have the greatest chance of the investors losing their money for good. Incidentally, this is why businesses are so concerned about making sure that their shareholders stay pleased with the company. For this reason, typically only the very rich end up being investors. Since they have larger sums of money saved, they can afford to take greater risks, and in doing so produce new businesses and industries which lead to better products and jobs for everyone. However, if they have their money stolen from them by way of taxes, they will be more hesitant to take risks and start saving more and investing less. This may or may not happen immediately, depending on what tax rates are raised and how much they are raised. But so long as the rich see themselves taking home less and less money, they will eventually cease making investments. This is why I've said before that the biggest failure in economics is the failure to see the long-term effects of a policy. Just because a policy is instituted and there is economic growth the following year, or even 3 years, does not necessarily mean it was a good policy. Better to make economic decisions based on long-term research and historical data. Phew. Well, with all that laid as a background, let's get into the Young Turks video.
One of the claims that Republicans are making is that we need to drastically cut the corporate tax because that will lead to an explosion of growth for reasons you can read about in Harry Potter.
Reasons you can read about in Harry Potter? Try the last 100 years of economic history. See link in the description for James Pococus article documenting this.
The Wall Street Journal, though, recently held a meeting of CEOs with Trump's chief economic advisor, Gary Cohn. And let's find out if the CEOs believe that that's likely to happen. Let's take a look at this.
If the tax reform bill goes through, do you plan to increase investment, your company's investment, capital investment? Just a show of hands, the tax reform goes through? Okay.
Why aren't the other hands up?
Why aren't the other hands up?
John, I've got a question for Gary quickly.
Why aren't the other hands up?
Because these are smart people, I guess.
Yeah. Well, I'm kind of shocked that in that particular forum, the video cameras are on. Why they wouldn't lie? I'm not just like the.
Okay, I give presentations on a regular basis as part of my job. Anyone who does knows that when you ask people to give a show of hands, it's hit or miss. And quite honestly, most of the times it's miss. I cannot count how many times I've asked people to raise their hands and everyone just sits there and stares at you, even though I know for a fact most of the people sitting in the audience ought to be raising their hands. Most people instinctively hold off on raising their hands because they know it might get them called on by the speaker or that it could be some sort of trick question. Honestly, I'm not surprised that most of them didn't raise their hands, though. We just went over how there are numerous additional factors that affect economic growth besides simply the corporate tax rate. They can't possibly know for sure what they'll do at this point, so they didn't want to raise their hands lest they be held accountable for something they don't know for sure whether or not they'll do. Further, suppose they all raise their hands. I suspect the liberal commentators like y'all would have just said they were lying.
I mean,
Because look, I mean, everybody who runs a corporation's not an ogre, right? They don't want to lie,
Yeah.
right? They don't want to get caught lying. They're like, I don't know what I'm going to do with it. We'll see, but I got to pay off my shareholders, and I got to.
No, but it's illustrative of the fact that the Senate and these Republican senators are totally disconnected from the reality of what's going to happen.
Of course, right? Because as I'm saying, they're not going to lie because they know they won't. Right?
Yeah.
They don't think it's the.
And that doesn't mean that they won't benefit. Of course, they will get that money. They just don't necessarily intend on putting it back into the actual company and doing all that sort of
wages or higher
or wages as well. Like I would have loved to have seen that question.
Yeah,
will
that
you
would
raise wages if we shower you with all this money?
No, they won't because they haven't yet, and they have all this money.
Of course, of course.
So what exactly do you think all these CEOs are going to do with their profits? Hoard it? Fill a swimming pool with money or fill their pillows and sheets with money so that they can lay there and bask in how much money they have?
Having a vault full of cold hard cash and that's swimming in it. I love to dive around in it like a porpoise.
This really upset the rich people because they love their money more than anything in the whole world.
I just bought a giant room full of gold coins and I'm gonna dive into it like Scrooge McDuck. Ah! It's not a liquid. It's a great many pieces of solid matter that form a hard floor-like surface. Ah!
Like I already said, rich people don't get rich by just sitting on their money. They get rich by making investments, which leads to economic growth. However, they can't possibly predict what sort of investments they're going to make at this point, if any at all. Will they raise wages? Well, they might if there was more competition and they needed to encourage their employees to stay on with them and not opt for a competitor that provided higher wages. However, due to government regulations, small businesses and other forms of competition for these large corporations are usually regulated out of business or forced to stay too small to be meaningful competition, giving these larger corporations that you despise so much control over their respective markets. This allows them to get away with keeping their employees' wages lower, something that wouldn't happen if there was less regulation and more free market competition.
They've been doing very well. Trump keeps talking about the stock market, but are wages going up? No. Why? The corporations are doing so well. Weird how that works out. And so Steve Mnuchin, Mnuchin. I know I pronounce it differently every time I say it.
Oh, okay.
I despise him.
Sorry.
So pictured back here, auditioning for the next Batman movie. He was asked about this, why it is that they won't pledge to do the sorts of things the tax bill debate is sort of founded on, and here is his response.
If the tax reform bill goes through, do you plan to increase investment, your company's investment, capital investment? Just a show of hands, the tax reform goes through? Okay.
Why aren't the other hands up?
Why aren't they up, Mr. Secretary?
Well, must have been a tired crowd there. I've literally met with hundreds and hundreds of business executives, big business, small business. Everybody's very excited about this. And I can tell you all the international companies I've spoken with think a 20% corporate tax on a territorial system is going to bring back a lot of jobs and trillions of dollars here into the economy. We have lots of people who are lined up in support of this, the Business Roundtable, financial services. There's a lot of excitement about this plan.
When his batteries run out,
exactly. There's something up with him. So that must have been a tired crowd.
Right.
That's one way to spin it, I guess. But the thing is,
he's very
again,
funny, this secretary.
He's the best.
Jeffrey Wright's gang just needs to take him back into the lab and fix the upper lip.
It's a Westworld. Yeah, Westworld thing. Nice. Yeah. I had to identify the actor in my mind. So again, like I think having that group of CEOs come together is interesting. We can gather some data from that, but we also, like we've said in the show already, we know how this goes. We know what they do with the money already. So I looked up, SP Global said back in May of 2017 that the 2,000 S&P globally rated businesses were currently sitting on $1.9 trillion that they just have. Now, we've talked before, I'm not gonna go through the whole thing, but why is it that doesn't suddenly improve the economy? Well, you can take the most basic economics course in the world and read about supply and demand, and you'll understand that simply giving them more money does not produce a demand for their products. It certainly doesn't produce the financial ability to buy more of those products. You could do that if you wanted to, but that's not their strategy.
It does allow them to take bigger risks, however, when it comes to their investments, which they won't do if they have less money. High-risk investments have the potential to produce the most profits, but they won't be undertaken if the investors don't have enough collateral saved to ensure they won't go broke if the investment fails. Well, it's true that corporations having more money doesn't necessarily lead to greater demand for their products. Taking more of their money ensures that they will take even fewer risks, make fewer investments, and hire fewer individuals. Do you honestly think that taking more money from corporations will lead to more jobs? Seriously.
They simply think, oh, you give the businesses a bunch of money, then there's a phase 2 that I don't really understand. Then phase 3, everything's better all of a sudden. Right. It doesn't make any sense. I'm an idiot. I've never had more than like $7,000 to my name.
Only $7,000 to your name? Well, I can't say that's a surprise given what I've seen of you so far, and it does reinforce the possibility that you might be an idiot. Maybe if you were a little more economically literate, you'd make more money and not have to advocate the government stealing from others to give to you.
But I agree with the CEOs there. It's not going to happen.
maybe you or maybe people, I don't have any faith that they even think it'll work. I mean, I got it. I don't think that they're evil. I certainly don't think.
I'm trying to appeal to the people who trust them, unfortunately.
They don't, it's a lie. We're being lied to. This isn't what they want. What they want is to pay less in corporate tax. They think it's outrageous that they pay this high a corporate tax, and it should be less, and that it strangles the ability of CEOs and business leaders to make as much money for their company as they want. The money that will then, as we now know, since whenever we started paying off the shareholders, the only thing that mattered, that's what they're supposed to do.
Well, it was the investment of those shareholders that allows the corporation to exist, and for all the jobs the corporation it provides to exist, so paying them back might be a good idea. Exactly what's bad about keeping the shareholders happy, since it's them who keep the corporation afloat? Alright, I'm going to cut it off there because the rest of the video is just them rambling about some other stuff that I don't think is particularly relevant. Link in the description if you'd like to see the whole thing. I'll finish off by summarizing yet again why taxes and wealth redistribution will not help the economy in the long term. If you steal from Peter to pay Paul, Paul will rejoice in the short term. However, eventually Peter won't be so inclined to keep working while Paul benefits from his labor, and so Peter will stop working. Once Peter stops working, there will no longer be money with which to pay Paul, and so Peter and Paul both lose. This simple two-person example applies to the whole economy. The process may happen slower when 300 million people are involved, and the tax rate gradually grows, but the bottom line is that higher taxes can never lead to permanent economic growth. That is my 2 cents. Take it for what it's worth. Thanks everyone for watching. If you liked this video, please hit like and subscribe. You can also hit the bell to ensure you're notified every time I upload a new video. This video was made possible by my patrons, Joshua Bartlett, James Schubach, and Hector Defendi. Thank you so much to all of you. If anyone else would like to donate and help ensure that I have the time and resources to keep putting out content, for just $1 a month on Patreon, you'll receive a shout out at the end of every video and the link to one of your social media platforms in the description. You can also follow me on Twitter, minds.com, VidMe, WordPress, and iTunes. Uploads are every Tuesday, Thursday, and Saturday, so stay tuned for more videos.